Thank you for stopping by and welcome to the first episode of Market Monocle. This is a new channel dedicated to a research-heavy approach to investing with the goal of finding high-quality stocks and investment ideas. Before we begin, though I have over 10 years of equity research experience at investment banks, I'm not a financial advisor, so please take note of the disclaimers on this page. Now I know what you're thinking. There are already plenty of similar channels out there. Why are you creating another one? The main reason is that while I think there's lots of new content out there, it is actually hard to find good quality and under-the-radar ideas that are backed by sound investment thesis and research. With the rise of Robinhood and Reddit-inspired trading, I've noticed that there are simply a lot more what I consider to be gambling instead of investing. At Market Monocle, I follow a thesis-driven approach to investing and will only focus on stocks that I believe have a strong risk-return profile, preferably those with multi-year structural themes. I will also try to cut through the BS for you and only discuss the things that matter. If this is a style of investing that you're also interested in, then please hit that subscribe button to support the channel. Alright, let's dive straight in. Today I'll be talking about a stock that is not discussed anywhere on YouTube and is primarily an event-driven idea. The stock is Kushco Holdings, ticker KSHB, with a current market cap of around $175 million. I'll first fill you in as quick as possible what Kushco is all about. Kushco operates in the US cannabis industry and was founded in 2010. Even though it's only 11 years old, for a rapidly growing industry like the US cannabis industry, this is considered a very early mover with lots of experience. The stock is actually traded on the OTCQX. For those who are not familiar, OTCQX is an over-the-counter exchange and is actually the top tier of the three OTC exchanges in the US, the other being OTCQB and Pink Sheets. What this also means is that many investors who use popular trading platforms, such as Robinhood or Webull, cannot buy the stock. If you yourself are on one of these platforms, do not worry, as you will soon be able to participate through other means. And this is an important part of the thesis, which I'll explain later on. Though Kushco operates in the cannabis industry, it does not grow or sell weed directly. Instead, it focuses on the ancillary products such as vaping equipment and packaging supplies like child-safe storage bottles. In other words, Kushco is a pick and shovels business to cannabis cultivators like the MSOs, or multi-state operators. There's plenty of benefits to investing in pick and shovels plays, rather than growers. One is that it's often overlooked by investors, which makes it much more likely for it to be undervalued, while another reason is that they are brand agnostic, so the business does not depend on any one brand to continue gaining market share. But perhaps the most important is that non-plant touching businesses are allowed to list on major US exchanges such as the NASDAQ and NYSE, while MSOs are not, because cannabis is still federally illegal. We'll come back to why this is important later. So what products does Kushco actually sell? If you look at all of the company material on its IR website or 10Ks, you will find that the company describes itself as first and foremost a supplier of packaging supplies to the MSOs. But to me, that's a bit misleading. I would consider them as first and foremost a distributor of vapes or vaping equipments for CBD or THC e-liquid. This is because since getting into the vapes business in 2017, the majority of its sales have actually come from this distribution business. And the reason why it's so successful is because the company holds one of 4 exclusive distribution licenses for C-Cell products in the US. C-Cell is a leading vaporizer and components brand that is owned by S'more International, a vaporizer manufacturing behemoth that is based in China and publicly listed in Hong Kong. Now, since S'more is a public company, I've combed through all of their filings and it is clear that they are the real deal. Basically, they manufacture close to 20% of all vapes in the world. It's growing at a pace of over 40% per year and has a market cap that is currently close to $40 billion. That's 200 times larger than Kushco. Arguably, I think Kushco's partnership with S'more is the company's most valuable asset. Now, I'm not surprised that the company de-emphasizes the importance of C-Cell in its public communications, since no company wants to be known as simply a distributor of someone else's brand. Now, Kushco has had a very tough last 18 months. The troubles started with EVALI, which stands for e-cigarette or vaping product use associated lung injury. If you don't know what that is, a quick Google search and you'll find plenty of negative press on this. It all started in summer 2019 when many people had to go to the hospital after using certain brands of vapes. Ultimately, the FDA concluded that it was due to illicit or counterfeit vaporizers that contained foreign chemicals like vitamin E acetate and had nothing to do with the legitimate and safe vapes like those carried by Kushco. EVALI cases peaked out in September 2019, but the damage done to the vapes had lingered much longer than that due to misinformation carried by mainstream media. In fact, according to the Marijuana Business Daily and data from Headset, the market share of vapes as a cannabis consumption medium fell by 3 points in 2020. Of course, the effects of EVALI was exacerbated by COVID-19 and had a major impact to Kushco indirectly, not so much from the customer demand side, but mainly from the drying up of liquidity and bank loans to many of Kushco's smaller customers, causing issues with receivables. As such, Kushco has had a very tough 18 months of intense macro headwinds. Now, the good thing is Kushco has gone through a major restructuring program, and I think they're at the tail end of it. It has done two big things. One, it has cut away a lot of redundancies and created a much leaner organization. And secondly, it has repositioned itself with larger clients and top-tier MSOs, dropping the small, risky clients. As a result, I think quality of earnings is much stronger, and it's starting to bear fruit as the company posted 2 consecutive quarters of positive EBITDA. Moving on to why we're excited about the stock. On March 31st, it was announced that Kushco is entering into a stock-for-stock merger with another cannabis ancillary products company, Greenlane Holdings, ticker Gnln, traded on the NASDAQ. Straight off the bat, I think this transaction makes a lot of strategic sense, and I view it very positively. Even before the announcement, I've been long monitoring both companies, and I've always thought that a merger would be beneficial. This is a classic case of 1 + 1 is bigger than 2, and I'll explain why in a moment. Just to fill you in on the important details, the transaction is a merger of equals, and as mentioned, solely a stock transaction. Each Kushco share will be exchanged for 0.2546 Greenlane shares. Greenlane will be the surviving entity, which makes sense since it is the one that is traded on the NASDAQ. Kushco shareholders will ultimately own 49.9% of the combined entity. Now, fundamentally, these two companies have a lot of similarities from a scale and business perspective. Immediately before the announcement, the market cap of Kushco was $150 million versus $180 million of Greenlane. Revenue-wise, Kushco's 2020 revenue is $114 million versus $138 million for Greenlane, so the scale of the two companies are comparable. The most interesting similarity, in my opinion, is the business mix. Around 2/3 of the revenue for each company comes from the vapes, while both companies have a growing packaging business. The real beauty of the transaction comes from the fact that while they're very similar, there is also very little overlap. Kushco is more of a B2B business, selling to major MSOs, while Greenlane's vape business is primarily B2C, as it owns a portfolio of in-house brands. This creates plenty of new cross-selling opportunities, though I think most of this will be Greenlane products selling into Kushco's channels. Management is targeting a $15 to $20 million of annual run rate cost synergies. Since the announcement of the merger, Greenlane stock has rallied by 40%, while Kushco shares have only increased by 16%. I attribute this to several reasons. One, Greenlane shareholders appear to have the better end of the bargain, as the transaction prices Kushco at only a 6% premium to the average 20-day VWAP. And if you look at Kushco's share price, it is still way below its all-time highs and even its share price just 2 months ago. 2, Kushco's B2B business has a stronger business model than Greenlane's B2C focused business model. And 3, more investors can react to the transaction since it is on the NASDAQ. Overall, I think the transaction is a great one, but I have to say that the implied valuation of Kushco based on the exchange ratio is very disappointing, which still values Kushco at less than $200 million at current prices. Based on the midpoint of management's own 2021 revenue guidance of $130 to $160 million, this implies that the price to sales ratio is less than 1.4 times, which is a steal. I understand that there's a huge valuation range among cannabis companies, but by and large, scaled companies can fetch an absolute minimum of 4 times sales easily, given the growth of the industry. If the implied valuation is weak, why do I still like the stock? Well, the biggest reason is access to the NASDAQ market. I think many people underestimate how important this is to the share price, and in fact, uplisting organically has actually been a top priority for Kushco's management in the last 2 years, but without success. Kushco applied to be uplisted to the NASDAQ as far back as July 2019, but due to the many headwinds since then, including a major deterioration of the business and the share price, it has failed to gain any traction. To illustrate the impact uplisting can have on the share price, it is best to look at a real-world example that is highly comparable in my opinion. GrowGeneration Corp, ticker GRWG, now listed on the NASDAQ. GrowGen is a perfect example for a number of reasons. The company is a non-plant touching ancillary company in the cannabis space that sells primarily hydroponic equipment to growers. In other words, it is a pick and shovels play. Similarities don't stop there. GrowGen was long trading on the OTC exchanges before being uplisted to the NASDAQ on December 2nd, 2019. In fact, GrowGen was initially listed on an even more illiquid exchange, the OTCQB, before being uplisted to the OTCQX, the same exchange that Kushco is on right now. So as you can see in the chart, GrowGen's stock did not immediately explode upwards after uplisting. But then, like clockwork, the stock gained increasing attention among both institutional investors and retail investors, and have rallied continuously throughout 2020. 3 months after uplisting, the stock was added to the cannabis ETFs. 4 months after that, they joined the Russell 3000. The turning point was 2Q20 earnings, which was very strong and gave the opportunity for the CEO to get on Jim Cramer's Mad Money. This gave them a lot of free press. Just look at that spike in volume, something that still has not been matched. All said and done, GrowGen's stock rallied 12 times in 15 months since the uplisting to the NASDAQ. The market cap is now close to $3 billion. And in case you didn't catch that, I will repeat once more. GrowGen's stock jumped 12 times in 15 months. Now, I'm not saying this will happen to Greenlane and Kushco, but I'd be happy for 4 times in 12 months. Another reason to buy Kushco shares is simply a merger arbitrage opportunity. Based on the price Greenlane is trading at and the 0.2546 exchange ratio, the value of Kushco shares should be trading at 1.466. But based on the current share price of Kushco, it is trading at roughly a 10% discount to this level. This is actually pretty normal for most transactions, as the discount factors in risks that the transactions will fall through. But if you believe that the transaction will complete, just by buying Kushco shares now, you'll be earning a 10% spread within a few months. Another catalyst is US cannabis legalization, or any news of progress. I'm not going to talk about this much, since there are lots of video out there, and this is quite self-explanatory. This itself is a very big topic, and I'll probably make a separate video about this later on. The latest big news for the sector is New York legalizing recreational use, and Senate Majority Leader Chuck Schumer making headlines again as he pushes for cannabis legalization on a federal level. Another important catalyst for the company is if the impact of EVALI in COVID-19 dissipates. To me, this is only a matter of time, and once vapes become trendy again, Greenlane and Kushco sales will benefit. The last visible share price catalyst I see is that I expect much stronger earnings results from Kushco in the back half of this year. This is partly due to the ongoing reopening of economies, but also a result of the company being less impacted by port congestion issues globally. This is also the reason why I think there's a chance that the upcoming 2Q fiscal year 20 results that will be announced on April 8th would not be particularly exciting. I'd like to spend a moment on the potential risks to my call. I think there's one thing that most YouTubers and even broker reports fail to address. First of all, the merger simply might not go through, and the shares would then drop again. But to me, the likelihood of this is pretty low, and even if the deal does collapse, I'm still positive on Kushco's fundamentals. Another downside catalyst could be if the results announcement on April 8th is much worse than expected, mainly due to port congestion issues, as I explained before. Though in reality, I don't think earnings would be a core driver of the stock in the near term anyways. A continued sector-wide pullback in cannabis stocks would also cause Kushco and Greenlane shares to drop. Most cannabis stocks are still down by at least 20% from the mid-February highs. The rotation out of cannabis stocks could be due to the rotation from growth to value-oriented stocks and slower than expected progress on the legalization front. Another downside risk I see is the possibility that the merger synergies just don't bear fruit. Research from McKinsey have said that around 70% of M&A don't actually yield the planned cost synergies. For Greenlane and Kushco, I think the probability of this is low, given the significant similarities between the two companies. I would also like to point out that with the merger of a B2B and a B2C business, there is a potential of a conflict of interest with the vaping business. In the unlikely scenario that S'more does not like Greenlane selling its in-house brands, this may result in the withdrawal of the distribution license for C-Cell. Last but not least, I'd like to point out that Kushco has a history of diluting shareholders. Without fail, the company has raised money every year through dilutive offerings. My own tracker points to at least 10 dilutive share sales in the last 5 years, the latest being in February 2021, raising $40 million at $1.65 per share. The seemingly perpetual dilutions is probably my biggest criticism of the current Kushco CEO Nick. And since he'll be leading the combined entity at Greenlane, one can only hope that he stops this strategy of diluting shareholders. To some of the key points in the episode, firstly, the merger makes a lot of strategic sense, and this is a classic case of 1 + 1 is larger than 2. Despite this, if Greenlane was not a NASDAQ listing company, I would consider the terms of the transaction poor for existing Kushco shareholders. Kushco shareholders are indirectly paying to uplist to the NASDAQ, given the low valuations. But this is probably worth it over the long run, as Kushco would immediately gain access to a deep pool of investors and a chance for a meaningful valuation multiple re-rating. So the action to take is, if you have access to Kushco on your trading platform, buy the stock in phases, but be cautious of a weaker than expected upcoming earnings. If you are on Robinhood, Webull, or any similar platforms, I will be buyers of Greenlane upon a share price pullback. So that's it for the first episode, which is longer than I initially anticipated, but hope you find it useful. I will continue following the mentioned stocks, so make sure to hit the bell icon if you want to be notified of updates. If you like this video, all I ask is that you like and leave a comment on the video, and also hit the subscribe button. It takes a lot of time to put these videos presentations together, and it really helps me kickstart the channel and provide motivation to continue making them. Thanks, and I'll see you in the next one.